Alright, hello everyone, welcome to my YouTube channel ForexPnL. Today is Saturday, the 2nd of April 2022, and it's time for me to do my weekend Forex forecast for the upcoming week. Alright, so without any further delays guys, we're going to go into the charts. As usual, we're going to be covering DXY, the 8 majors, and for today we have 6 cross pairs that giving me some structural levels to keep an eye on as we go into next week. So we're going to be reviewing those currency pairs, but without any further delays guys, we're going to kick things off by taking a look at the Forex Factory economical calendar for next week, just to kind of have an idea what we have on the economical agenda for the upcoming week, especially from a high impact perspective. Okay, so I've now filtered for bank holidays and high impact news, and this is what we have on the agenda, and well, it is way better than what we have this week. Okay, quite light in my opinion. We have Bank of England governor speaking on Monday. All right, and again, all times are Eastern time. And then on Tuesday, that's when we actually have some high impact news per se, which is the interest rates that will be coming from the Australian axis, and obviously the rate statement. And then we also have the ISM services PMI coming from the United States axis, 10 a.m. Eastern time on Tuesday. Wednesday, we have FOMC meeting minutes, quite significant as well. Thursday, we don't have any activity for now, and then on Friday we have the employment and unemployment data coming from the Canadian axis, 8:30 a.m. Eastern time. So that's what we have on the agenda, at least at this particular time, from a high impact news perspective. So not much I can work with this, all right, and that's fine. So I'm going to be kicking things off with the DXY. As you can see here, for this particular week, the DXY closed pretty much, will I call this a spinning top or a pin bar? Well, that doesn't matter, but the message I really want to pass across is the fact that if you pay attention, after this nice bullish thrust that we got here in this particular swing, for the past 4 weeks, the market has been ranging, and you can see this is the high of the past 4 weeks and this is the low of the past 4 weeks, and the market has pretty much been bouncing up and down, all right, in a range in this particular area, all right, and that is because you can see price has actually tapped into that selling origin that we have here on the weekly, and this was actually expected, all right, that chances are we probably have some sell orders in this particular area that might cause a significant maybe retracement in this particular index, all right. So well, from here, because of the way price is moving, in my own opinion, we're inside a range and we're bouncing off of a selling origin. My preferred course of action personally would be probably to see price begin to give us maybe some kind of push to the downside, respect that selling origin significant to the point that maybe we might get a retracement into the weekly demand zone, from where maybe I will expect the bulls again to come back into this market to gather momentum for further continuations to the upside. I kind of see this as one of the possibilities in this particular currency pair at the moment. All right, now if we go into the daily, the big picture becomes even clearer. With this being the top of the range and this being the bottom of this particular range, right around that 97.75 level, inside this demand zone. But if you pay attention in this particular index right now, you notice that we are in a range, all right. However, whenever price dips into this particular demand zone, we fail to kind of make a new high, so we dip in, pick up some orders, but then we fall shy of making a new high, and then we rotate again to the downside significantly, within 1 or 2 serious solid bear candles, and then it takes us significant time to make it back to the highs. All right, but again, we failed to make a new high, and from here you can also see, look at these 2 bearish body candles, and before you know it, again we are bouncing off of that particular demand zone. So this demand zone is now getting weaker and weaker as we pick up orders from this area right around here, all right. And if you see, we are failing to make a new high, all right, and again price is tapping into that particular selling origin. So in my own opinion, at this particular point, I'm favoring more a possible bearish rotation, because we are finding a lot of hesitation off of this particular demand zone. So my preferred course of action as we go into next week will be for price to probably give us maybe a rotation to the downside, finally maybe breaking below the lows of this particular range, And then when that happens, maybe a possible retest of the range lows, but I will expect this to probably give us a dip into this particular demand zone that we have on the weekly, all right? Maybe right around the 95.50, 9600 institutional price level, anywhere from right around here, guys. In my opinion, if the market begins to bounce, then chances are we're going to see maybe another rotation to the upside for another attack of these highs that we have here and beyond. All right, that is my preferred course of action. Now, that being said, another possibility is that let's say from here, price is going to give us, let's say, another push to the upside, clearly taking off the highs of this particular range that we have here. When that happens, obviously a new demand zone would have been formed, and all I'm going to do is just to obviously start waiting for retracements for price to fill up demand zones in the smaller time frames for further continuations to the upside. Okay, that is going to be my preferred, actually not my preferred, but what I would love to see before I start searching for bullish continuations from this range area. All right, but again, preferred course of action is going to be, let's say, for price to give us that rotation to the downside into this particular demand zone area on the weekly, from where I will expect the bulls to start coming back into this market for further continuations to the upside. All right, so that's it for the DXY, guys. Next up is going to be US dollar Swiss francs. All right, so for US dollar Swiss francs, if we take a look at the weekly time frame, what do we have here? Again, price obviously still inside this particular flat top triangular consolidation, and you can see that we've now gotten a very deep pullback almost towards the trend line of this particular flat top triangle, also deep inside this engulfing pattern that we have here. So you can see we got some form of a rejection, okay, to the upside right now, and this week actually closed, will I say, this is not a bearish candle. I would say this is an indecision candle, honestly. Okay, first of all, price gave us a significant push to the upside as I was anticipating from the last week's forecast, but we fell shy of that 0.9400 level by about 20 pips, and then price gave us another significant rotation to the downside all the way towards 0.9200 institutional price level area, and then from there you can see price gave us a significant retracement towards and closed the week at 0.9250 area. So not much in this particular time frame at the moment. The only thing I can say is maybe price came very close to the bottom of this particular triangle, and let's see what happens next week. Honestly, there's not much information I can siphon from this particular time frame at the moment. Yes, we are looking at we are having a bearish rotation. However, if you also pay attention, we are still trading above this particular trend line. So course of action here, price can easily give us a nice push to the downside, taking off these lows that we have in this area. When that happens, in my opinion, that would be an indication that at least one, we have broken below this particular flat top triangle, and we have also broken the flow, okay, and taken off this higher low in this particular area. That will be the first indication that the bears are in this market, and if that's to happen upon any form of pullbacks, I'll be looking for price to fill up supply zones that we have in the smaller time frames for further continuations to the downside. All right, so that's going to be my analysis, at least from this particular time frame, based on what I'm seeing now. Also, if you pay attention to the monthly time frame, guys, you notice that last month's candle closed a very beautiful pin bar. All right, so is that going to be an early indication that maybe we are about to now maybe get some continuation to the downside? Who knows, only time will tell. But I just wanted to point that out as well. Okay, so it's very possible that maybe we might get maybe some form of bullish push before, let's say, we get a significant break to the downside that will now break this trend line and these lows that we have in this area right around 0.9150 level. So 0.9150 level is going to be a key level in this particular currency pair for the bears to break, for us to start kind of moving to the downside, all right, or for me to start changing my bias significantly to the downside. But in the meantime, anything can happen. Price can easily bounce off from these particular areas right now and give us maybe another attack to the upside. All right, so let's see how it goes. But that's what I can see right now on my charts in this particular currency pair. Now, if we take a look at the daily time frame, all right, so this was the demand zone that I had anticipated to hold things, okay, to hold price for further continuations to the upside. Okay, last week, if you remember, on Friday, price had pasted this particular pin bar off of this demand zone, and I told you guys this is looking nice. Yes, we did get some bullish move, but from there you can see the bears have come in momentum. All right, and we are now obviously trading below that demand zone. But at the same time, if you watched the midweek forex forecast, I also told you guys that this is a tricky situation because this is a buying origin in this particular area right around the trend line of that flat top triangle. And I told you guys that it's also possible price can easily dip into this particular trend line area, okay, into this buying origin, and from there we can also get the boost to come into this market. So few things to happen here. If this move is to continue to the downside, let's say from now, maybe price does not take off this high in this area, and we maybe post another lower high for further breaks to the downside, clearly taking off that 0.9150 level that we had identified. That, in my opinion, is going to be an indication that the bears are now in this market, and we're going to continue searching for let's say price to fill up supply zones that form in the smaller time frames for further continuations to the downside. All right, in the event that, let's say, the market just continues to push to the upside from right around here, and we take off these particular highs in this area, that will be an indication that the flow has been broken, and from there I'm going to be waiting for price to maybe pull back into demand zones that form in the smaller time frames for further continuations to the upside, maybe for a possible retest of this flat top triangle high. All right, so those are the kind of scenarios that I'll be looking for as we go into next week. But as long as our price remains in this particular area right here, okay, I'm not going to be so interested in trading this currency pair. Okay, all right, so that's it, guys. That's what I'm seeing right now for US dollar Swiss francs. Next up is going to be Euro US dollar, if I'm not mistaken. Yep. Now for Euro US dollar, let's take a look at the weekly charts and see what's going on. So again, this is looking like an inversion of the Dixie. All right, we got this nice thrust to the downside, and you can see that for the past 4 weeks or thereabouts, price has pretty much been ranging again. Actually, in this case, it's not more of a range, but price is finding resistance in this neighborhood right here, right around that 1150 area, okay, which also corresponds to this previous swing low that we have in this area. Now, if you pay attention here, the wick closed a pin bar, all right, and that's looking as if the bears are protecting this particular area here on the daily supply zone area. Okay, you can see we got price to dip into this particular supply zone as we actually anticipated going into this week, because if you guys remember, I told you guys that I'm keeping an eye at that 111.70 area from where I will expect the bears to start coming into this market. Okay, looking at it from a weekly time frame, it's looking as if the bears are in still in very much control at this particular point, and well, let's see what happens. But that being said, also remember the fact that price is also tapping into this particular buying origin that we have here. So keep that in mind as we go into the daily time frame, okay? Because if we go into the daily time frame right now, let's take a look at this particular let's say flag looking formation and see what's been going on. All right, so right now obviously we have this supply zone that formed in this area as a result of the break of this level of structure to the downside. All right, now price give us a push, the first attack to the upside into that particular supply zone area. What happens? Well, from here we get price to give us a push to the downside, but we did not make a new low. Price just tapped into this buying origin area, and we got another push to the upside, taking off this previous swing high. All right, upon a second attack to the downside, what happens? Price does not even take off this low, and from here we got a very massive push to the upside, making a new high. Slowly but surely, this market is now making a higher high and higher low formation, which, well, is indicative of an uptrend. Okay, this could be early days of an uptrend, at least from the daily perspective. Okay, and again, to add to that particular statement, we are actually now bouncing off of a buying origin off of the weekly time frame. All right, so in my own opinion, this supply zone is weak. All right, yes, price is giving us that rotation to the downside. However, before I'll be interested seriously in to start searching maybe for short opportunities, or or to start believing that the bears are in control in this market, we will need to break this flow. Okay, price, we need to probably trade below these lows that we have in this area, right around that at 1.0950 institutional price level. Okay, we need to take off these lows that we have in this area, because as long as price remains here, we are still respecting the flow, and this still remains a higher low formation. Okay, so this area is going to be key in our decision making for the week. Okay, so we are going to map up this demand zone in here. Okay, because you can see it led to this clear break of structure. So this is obviously a minor demand zone area in the daily charts. All right, now if we narrow things down to the 4 hours time frame, things become very clear in my opinion. So if you pay attention, this is the area where this move really started. So key level for next week in my own opinion is going to be between 110 and 1.0950. What price does in this area is going to be key for Euro-US dollar. Now, should price give us a dip to the downside, let's say early next week into 110 area, and then from here we begin to, let's say, bounce from this particular area, then in my own opinion, I would not be surprised to see price give me a significant push to the upside, which could be maybe the beginning of a move that might take us into this particular weekly supply zone area, maybe right around for a possible retest of 1.1400 area. Okay, which will be deep inside this particular weekly supply zone area. All right, maybe from there, if that is to happen, maybe from here, maybe the bears might now begin to come into this market for another possible rotation to the downside for a possible retest of this 10850 previous swing low area. All right, so that's kind of what I'm keeping an eye on right now in Euro-US dollar. It's not looking like it's not looking so clear. All right, so it's very possible, that price can break below this particular demand zone area that I have mapped out. If that happens, let's say the market from here next week, we get a very clear break trading below that's our 1.0950 higher low area. If that happens, new supply zones will form, and then all I'll be doing is just to wait for price to give me a pullback into that supply zone that have formed in the smaller time frames for further continuations to the downside. So those are the kind of price patterns that I'm going to be looking for. But again, like I said, the key area next week for euro dollar is between 1.0950 and 110.100 institutional price levels. Okay, do we get a bounce or do we get a break of that particular zone right here? That will be key as we go into next week in Euro-US dollar. All right, so that's really it for euro dollar. As usual, guys, I'm going to be making a midweek forex forecast video on Wednesday 1 a.m. Eastern time, and I'm going to be giving you guys an updated analysis based on the movements that have occurred in the markets earlier in the week. All right, and as usual, guys, I hope you gain some value from those videos as well. And also, I made a video yesterday of a monthly forex analysis, okay, of the 8 currency majors. So guys, feel free to kind of watch those videos and see what I have, pointed out from a longer term perspective for the 8 majors. All right, so that's it for Euro-US dollar. Next up is going to be Australian dollar US dollar. Now, Australian dollar US dollar kind of played out the way we anticipated. We expected this particular demand zone in the 4 hours time frame to hold price. Price gave us a dip into that area, but if you pay attention, we didn't quite make a new high. All right, so this is now becoming a sign of weakness in this particular currency pair. Yes, price gave us a push to the upside, but you can see we had significant hesitations. Look at all these weak rejections that we got as price approached this previous swing high area. Now price is slowly beginning to round up in this particular currency pair. You can see this is looking like almost even like a potential head and shoulder formation. Okay, price gives us a bounce in here, and then from here what happens? We are now slowly rounding up, okay, for maybe another rotation to the downside into this particular daily demand zone at the minimum. All right, that is what it's looking at the moment. Now the question is, if we do get a push into this particular demand zone, how does price react off of 0.7400 institutional price level? Do we get maybe a bounce from here for another push to the upside, or will price just give us maybe a little hesitation for further continuations to the downside into, let's say, 0.7250 area, which is this buying origin area that we have, actually 0.7200 area, for maybe another possible rotation to the upside. Okay, so who knows? Only time is going to tell what happens in this particular currency pair. But well, first of all, we have to see how price reacts or interacts right around this 0.7400 institutional price level. Now remember, we have the interest rate decision for Australian dollar coming out next week, so keep an eye out on that particular news, as that is probably going to probably be a determining factor as to how Australian dollar moves next week. All right, so that's it for Australian dollar. I'm not really going to waste much time, especially since we have that fundamental release. But again, from a structural level, from the higher time frames, we are looking more bullish than bearish. In my own opinion right now, it's just a matter of how deep of a pullback are we going to get. Is it going to be a pullback into this particular demand zone that formed as a result of this break of structure, maybe for another continuation to the upside, or are we going to get maybe a very deep pullback into the buying origin areas, these areas right here, like I said, let's say 7200, 7250 area, for maybe another possible push to the upside. All right, so that's kind of what the price actions that I would prefer to see. Now obviously, in the event that price does not really give us a pullback and we begin to get a solid break of these highs that we have in this area, then that will lead to the formation of a new demand zone, and I'll just be waiting for price to give me pullbacks in the smaller time frame into the demand zones that have formed for further continuations to the upside. All right, that's pretty much my game plan for Australian dollar as we go into next week. Next up is going to be New Zealand US dollar. Now for New Zealand US dollar, the story is quite similar to the Australian dollar US dollar currency pair. All right, in this particular case, price has given us actually played to perfection. If you guys remember, we were waiting for price to give us a dip into this particular demand zone area, and we wanted to see price give us a push to the upside. That's pretty much how the markets moved for this week. However, we didn't quite sustain that bullish push. Price just gave us a quick break, okay, manipulated above the highs that we have, give us a spike towards our 0.67, actually 0.7000 institutional price level right here, and from there you can see the bears are now coming back into this market, and we are now back into that particular demand zone. So a few options here. Do we continue? Will this demand zone continue to hold, maybe for another push to the upside, taking off these highs, or will price give us a deeper retracement into this particular buying origin area, okay, that we have in this particular currency pair? If this is to pull back into this area, anywhere from right around here, if any bounces, in my own opinion, will be a high quality trade for further continuations to the upside. This is actually kind of the move that I prefer. This is going to be my preferred course of action, just because of what we saw in Australian dollar, US dollar, and also the fact that this pair is also not sustaining the breaks that we have in this particular area. So 0.7000 area might now be a significant level of resistance in this currency pair, and maybe we might get another rotation to the downside towards, let's say, 0.6775 area, or actually even 0.6750. Maybe 0.67, between 0.6750 and 0.6800 institutional price level, anywhere from right around there. If we get any bounces to the upside, I'll be looking for an opportunity to go long for further continuations to the upside. All right, so that's pretty much my game plan for New Zealand US dollar. Next up is going to be British pound some US dollar. Now for the cable, well, let's see what happened on the weekly. Now from the weekly time frame, well, we did get a very nice pin bar formation last week, and then this week we followed through with a bearish move. So looking bearish, okay. However, we are now obviously retracing from around the lows. Actually, we didn't quite get to the lows, so in my own opinion, this pair is still looking bearish. However, it's nothing much, okay. We still didn't quite take off this previous swing low, so it is looking more bearish than the euro dollar, to be completely honest with you, based on the kind of price action that we are seeing and the way we see the supply zones holding in the smaller time frames. All right, but well, not much can be said of this particular week's candle, and you can see how price gave us a push to the downside, and the bulls kind of kicked into this market, and we got a significant retracement in my opinion. All right, so not much from the weekly time frame of GU. at the moment. Now, if we go into the daily time frame, what do we have? Price gave us a dip into that particular supply zone, and from there you can see the bears have come into this market, and you know, we are looking more bearish than bullish. I'm seeing a possible you know, completion of this move, maybe for a possible push to the downside, maybe for a possible retest of 1.3000, from where the markets need to make a decision. Are we going to get the bulls to come back into this market to, you know, maybe cause another retracement to the upside, or would the markets break this 1.3000 institutional price level for further continuations to the downside? That's pretty much the question to be answered next week in this particular currency pair. Now, in the 4 hours time frame, if you guys remember in the midweek forex forecast video for this week, I had told you guys that the key area is going to be this particular supply zone that we have here, because if you pay attention, that is pretty much where this market's kind of reversed and turned bearish. Okay, the markets was forming higher highs all the way from here, and then finally right around here the markets took a breather and boom to the downside. We took off this particular demand zone area, and a supply zone was formed in the process. So, well, as long as price remains below this particular supply zone that we have mapped out right now in the 4 hours time frame, then in my opinion the market remains bearish as we head back towards 1.3000 institutional price level. Okay, so let's see how it goes in the eve. So the course of action, obviously, should price remain below here, then upon pullbacks I'll be looking for price to fill up supply zones in the smaller time frames for another push towards 1.3000 area, or the price give us a break to the upside, clearly breaking above this particular supply zone area. If that happens, I'm just going to be waiting for price to give me a pullback into demand zones that form in the smaller time frames for further continuations to the upside. All right, so that's the game plan for British pounds and US dollar as we go into next week. Now, next up is going to be US dollar Canadian dollar. Now, for US dollar Canadian dollar, the market is looking bearish as anticipated. I'm not going to waste your time here. You remember we kept an eye on 1.2600 institutional price level, okay, for this particular week, and you can see that price gave us a push into that 1.2600 level, and from there the bears came into this market and continued to push the markets to the downside. Now, if we pay attention to the weekly candle close, not much information. Price just gave us a pullback to retest this particular trend line area from below, all right, and which actually corresponds with this previous swing low area that we have in this particular candle. So the question now is, you know, will the bears just continue next week when the markets just open? All right, since this is actually looking now like a drop base drop formation, so to speak, all right, or are we going to maybe get another attack of this particular trend line to the upside, you know, just maybe to manipulate quickly above 1.2600 level, and then maybe from there the bears will now come into this market in momentum. All right, this is kind of my preferred course of action. I will expect the markets to give us some form of quick bullish rotation to knock off, you know, just to, you know, take off the stop losses that we probably have around 1.2600 area, and then from there the markets, I will expect to maybe test this trend line again from below. From there maybe the bears might come into these markets to start pushing things to the downside. So let's see, maybe 126.25, 126.50 area might be key as we go into next week, assuming the market gives us a bullish movement from right around here. All right, so that's it for US dollar Canadian dollar from the daily time frame. Now, actually, from the weekly time frame. Now, from the daily time frame, what do we have? Like I pointed out, the markets opened and we got a quick push to the upside on Monday, and then from there the markets gave us a very nice push to the downside. However, if you pay attention, the bears did not quite sustain that move. Okay, yes, Monday closed the pin bar and we followed through to the downside, but you can see the rejection we got to the upside, and since then the bulls have come into these markets. At least you know, in the daily candles are closing bullish at this point. So well, like I said, my preferred course of action will be for price to give me maybe a push towards, let's say, 1.2650 area, anywhere from right around this area. You know, this trend line is actually not looking the best right now because we are now in the daily. All right, so might need to adjust that trend line, but anywhere from right around, let's say, 126.25 area, 126.50 area, after price has taken off all this liquidity that's in this particular area, I will expect price to give me another rotation to the downside. All right, so that's going to be my preferred course of action. Obviously, for me to be bullish in this particular currency pair, we need to get, let's say, significant push to the upside, back into this particular triangle in momentum, obviously taking off all of this. Now if that's to happen, I'll just be waiting for price to give me let's say a push to fill up demand zones that have formed in the smaller time frames for further continuations to the upside. All right, so those are my will I say potential course of action as we go into next week, you know, for US dollar Canadian dollar. Now next up is going to be US dollar Japanese yen. Now this pair obviously has been bullish for the longest. Just take a look at last month's candle. Okay, price gave us a test of 12500 levels. Okay, and from there you can see the BS came into these markets, and you know, we succeeded in closing last month's candle at 2155. Okay, so yes, we've gotten some retracements in this particular market, but overall we are still bullish. Okay, if we take a look at the weekly time frame, this particular week is actually the first sign of weakness that we have seen in this particular currency pair in the past 1 month. All right, you can see that we've been getting full body candles. Okay, price closing very close to the highs of the weeks for the past 3 weeks, and then for this particular week price gave us a push to the upside towards 12500, and you can see we succeeded in closing this week a very beautiful pin bar. So well, I would not be surprised next week if, say, let's say the market opens and maybe we get a little push to the upside, only for the bears to come back into this market, and maybe we start that bearish rotation into the daily demand zones that I have just mapped out for maybe another possible attack to the upside. Okay, who knows, only time will tell. But again, this week closed a pin bar, and that could be the first sign of weakness in this particular yen crosses. All right, at least for this US dollar Japanese yen. Now if we take a look at the daily time frame, I've identified this particular demand zone area that I have on my charts right around, let's say, 1900 area. Do we have actually 1900 and 1850 area? So well, should the markets open this week and we get, let's say, get a push to the downside into 1900 area, anywhere from right around here, if we get any bounces, I'll be looking for an opportunity to go long for further continuations to the upside. Keep in mind, this is a daily time frame. All right, now if we pay attention to the 4 hours time frame, you notice that price is kind of running out. The market is now running out of steam slowly but surely. Okay, yes, the market is staying above this last demand zone area that we had identified in the midweek forex forecast, but we are not really getting that momentum push anymore to the upside. So well, this zone is now looking weak. Price has dipped in a couple of times, and you see we are not really taking off to the upside. So my preferred course of action would be maybe for price to give us a push towards, let's say, 123.25 levels. Anywhere from right around there, I want to see the bears come back into these markets and begin to push price clearly below this particular demand zone. If that is to happen, then I'll be keeping an eye on 1900 and 1850 for potential bounces for further continuations to the upside. This will be my preferred course of action for the, you know, as we go into next week. Now if we from here the market opens and we begin to take off this previous swing high area, this 125 level in momentum, as usual guys, just you know, adjust your demand zones as they form and wait for price to pull back into those demand zones in the smaller time frames for further continuations to the upside. That's it for US dollar Japanese yen. Next up is going to be British pound sterling Japanese yen, and well, quite similar to the US dollar Japanese yen currency pair. You will see that well, again, this week closed a pin bar in GJ as well, after price gave us moves all the way towards 164.50 level, 164.75 level. Okay, from this particular area price has pulled back towards 160 area. Okay, that's a significant retracement in my own opinion, and that is the first sign of weakness that we have now seen in GJ in a very long time. So again, just like I said, for the US dollar Japanese yen, will price give us now a push to the downside into this daily demand zone? Let's see, only time will tell, but that's kind of what it's looking like at the moment. The week closed bearish, and you know, that's the first sign of weakness, like I just pointed out. And if we pay attention to the daily time frame, this is the demand zone that I have mapped out on the daily that led to the break of this level of structure. All right, so well, let's see, do we get maybe a quick push to the upside, and then from here anywhere from right around here, if the market begins to break to the downside, well, I'll be waiting for price to give me a dip into this demand zone, from where I will anticipate a bounce in this particular currency pair for a further continuation to the upside. So key levels obviously will be, let's say, 156 156.25 area. So I'm going to be keeping an eye on this pair for a possible push to the downside into 156 as we go into next week. Now, obviously this is not what the markets must do. Price can easily give us, let's say, a quick push to the upside, clearly taking off these highs next week. If that happens, again, adjust your demand zones accordingly and wait for price to give you a pullback into those demand zones for further continuations to the upside. All right, so that's pretty much what I can see right now in GJ. Now, for the cross pairs, I'm gonna kind of breeze through these particular currency pairs. I'm not gonna waste your time. Now, if you guys remember, I've been keeping an eye on euro pounds as price, is now slowly but surely bouncing off of these lows that we have in this particular range that the market is trading on. Okay, so let me just map that out so you see the range I'm talking about. So this being the bottom of the range and this being the top of the range that this currency pair has been trading on. All right, so well, let's see, are we about to get a significant bounce for further continuations to the upside, or will price just give us a little pullback and then we finally break this low? But if you pay attention to this particular to what's happening right around here, well, this particular week here, about 4 weeks ago, closed an outside bar. Price has given us a push to the downside. All right, and from here you can see that this week again we got price to take off the highs of those resistance areas. So in my opinion, the bears are slowly losing the battle, and the bulls are slowly taking over in this particular currency pair. So well, what would I like to see right here? Maybe price has actually now given us a break of these highs that we have in this particular area. You can see the highs that we have here, this level of structure. We've got a very quick push to the upside that broke that particular level of structure, and well, right now we have created this particular demand zone area on the daily time frame. All right, so well, from here, price can easily give us a dip into this particular demand zone, from where maybe the markets might now, make a decision whether to continue bouncing to the upside to respect these higher highs and higher lows formations that we are now getting for further continuations to the upside. Okay. But one thing is for sure here, guys, it's looking more bullish than bearish. Okay, but I'll be keeping an eye on this demand zone area that we have, let's say 0.8350 level for the daily. All right, now that being said, 8400 level is key on the 4 hours time frame, because as you can see on the 4 hours time frame as well, this area right here gave us a very quick push to the upside that broke this level of structure, and price is slowly but surely coming back towards that particular level. So let's see how the market behaves. What I would love to see is early next week for price to give us a quick dip into the 0.8400 institutional price level, and anywhere from right around there, guys. If we get any reversals, in my opinion, that will also be a high quality trade for further continuations to the upside, at least for a possible retest of 0.8500 institutional price level and beyond. All right, so let's see how that goes. Now, so the two course of action here, guys, maybe first one, a bounce off of 0.8400 institutional price level for a 4 hours time frame move, or even a deeper push into, let's say, the daily demand zone that we have here, maybe 0.8350, from where any reactions, I'll be looking also for an opportunity to go long for further continuations to the upside. All right, so let's see how the market is going to play out in this particular currency pair. And now, assuming we don't get any deeper pullback in this particular currency pair, now obviously it becomes a key level of resistance in this particular chart, the high of this particular pin bar right here. So if that level begins to get broken significantly to the upside, let's say the market opens and we get a significant push above this particular level right here, then I'm just going to be waiting for price to give me pullbacks into demand zones that form for further continuations to the upside. All right, so let's see what happens in this currency pair. Now, next up is going to be Canadian dollar Swiss francs. I'm not going to waste your time here in this particular currency pair. Well, you can see this is the daily time frame right now in CAD Swiss francs. Price gave us this demand zone that was formed as a result of the break of this level of structure, and price has topped out right now, and we are getting some form of retracement. So price, in my own opinion, anytime we get a visit of this particular demand zone area again, anywhere from right around here, if we get any bounces, in my opinion, that will be a high quality trade for further continuations to the upside. All right, that's it for Canadian dollar Swiss francs. Next up is going to be New Zealand Japanese yen. So I'm not going to waste your time again. This is quite similar to the other yen crosses we've analyzed. So let's see. You can see price give us a very quick push to the upside, and then we got this pin bar with the weak rejections, and slowly but surely, you know, we are now rounding up in that particular area. So early next week, let's see, do we get price to give us a push to the downside into this demand zone area? Maybe any retest of, let's say, 82.50 institutional price level, anywhere from right around there. Any bounces, in my opinion, I would like to see the bulls come back into these markets to continue to push the markets to the upside. All right, so let's see how that plays out. That's it for New Zealand dollar, Japanese yen. Next up is going to be Australian dollar, Swiss francs. Now, for Australian dollar, Swiss francs, well, very simple, guys. Again, this is the daily time frame. Wait for price to give you a push to the downside into this demand zone that was formed as a result of the break of this level of structure around that 0.6800 institutional price level. Anywhere from right around here, guys. If we get any bounces, I'll be looking for price to give me a push to the upside for further continuations to the upside. All right, so that's it for Australian dollar, Swiss francs. Now, next up is going to be Euro Canadian dollar. Again, all I'm waiting for right now is for price to give me a push, a deeper push into this particular daily supply zone. If you guys remember, I was keeping an eye on 1.4000 for a possible retest of 1.4000. Price kind of fell shy. We got on the pull all the way to 1.3977, and from there we've gotten the BS to come back into this market. So let's see. Next week, do we get price to give us a retest of that 1.4000 institutional price level before, let's say, the BS begin to come into this market for further continuations to the downside? All right, that's gonna be my game plan and what I'm keeping an eye on in this particular currency pair as we go into next week. Now, the last but not the least is going to be New Zealand dollar, Swiss francs. Now, from here, price actually has now tapped the top of this particular demand zone area, but what I would love to see is for maybe price to give me another push to the downside deeper into this demand zone, let's say 0.6350 institutional price level. Anywhere from right around here, if the market begins to bounce, I'll be looking for an opportunity to go long for further continuations to the upside. So these are the currency pairs that are giving me a structural level to keep an eye on as we go into next week, guys. Hopefully you gained some value from this video, and if you did, guys, please do not forget to click on that like button, subscribe to the channel, click on that notification bell as well, so that you will always get updates whenever I post a video. That's all from my own end, guys. I hope you had a profitable week, and well, have a profitable week ahead as well. Cheers and bye-bye.